For more of the bank stress test results, let's bring in RBC's Gerard Cassidy. Gerard, great to have you with us.
Thank you, Melissa.
Your take on whether or not this will be a catalyst at all for these stocks?
We actually do believe it's going to be a catalyst. When you see the releases Monday night with the stress capital buffer numbers, we're also going to, of course, receive the capital action plans. And think about the dividends for a moment. The banks were not permitted to raise their dividends in 2020. So they have a year of catch up. So we expect to see double-digit rates of growth in dividends when they make their announcements Monday night. We also have the strong buybacks, as you know. JP Morgan in December announced a $30 billion buyback. One of the other pieces of news here is that in prior stress tests, the banks always had to ask for pre-approval on the dividend increase and the buyback. That is no longer the requirement. So these banks can be very aggressive on the buybacks in the second half of 2021.
So can you put this in context in terms of what the business environment is for these banks year on year and quarter on quarter when it comes to equity trading, when it comes to investment banking and FIC? Is the setup as good as it was last quarter in rates, of course?
Yes. No, it's not. As you know, the numbers in the first quarter and for the second quarter of last year were tremendous. The numbers this quarter will not match anywhere close to the first quarter or second quarter numbers, but that's been disclosed. So that's priced into the stocks. So I think you're going to see the capital market numbers, they're setting up into the quarter. Everybody's expectations have been lowered dramatically. So they're probably going to meet those lower expectations. But the actual year over year and quarter to quarter comparisons will be negative because of the strength of the prior periods.
Gerard, I know you heard Dan Nathan make fun of me, said I moved the goalpost with the tangible book, but is that irrelevant? Is it as relevant as I make it out to be when you look at bank earnings?
Absolutely. I think the earnings today are being artificially impacted by loan loss reserve releases. So the best valuations we are looking at are both price to tangible book value and price to book. And when you take a look at year-end 2017 and look where the banks are trading in what I would call a normal environment, if we could get to that kind of normal environment by the year-end 22 and into 23, the upsides for these banks is still very strong in our view.
I think Guy's follow-up that he would like to ask is, so you think Dan Nathan is wrong, but I'll push that aside. In terms of your favorite stock at this point for stock appreciation, Gerard, which one is it?
I would say Bank of America continues to be the stock of choice. And the reason being 90% of their business is here in the United States. We all know this economy is really strong and recovering. I'm back on the road. I'm in an airport right now. It is very crowded. So I would say that Bank of America, its valuation is low. It has opportunities for growth. And most of all, you're going to see a nice dividend increase next week from them. And they got a big buyback plan. They have over $25 billion set aside for buybacks. And that could be lifted later this year if they choose to.
Gerard, thanks for your time. Safe travels to you. Gerard Cassidy of RBC. Brian Kelly apparently is, in fact, on the phone and is, in fact, well connected to us in terms of his sound. So, Brian, what do you think of Bank of America?
Well, you know, I think they're fine. I don't think you're going to get rich off of owning all of these. Maybe there's some upside to these, right? But you think about the bank. I mean, one, they've had a tremendous run coming into this. Number two, they are getting they have competition from all sides, from fintech, from cryptocurrencies, from everything. So they are in the process of being disrupted. And, you know, if history tells you anything, you want to sell the disruptees and buy the disruptors.
I think that's a great point, Mel. I mean, Bank of America has a $345 billion market cap. You know what else does? PayPal. You know, when you think about disruption, I mean, when you think about the equal market caps and you think of all the other stuff with DeFi and everything, I think BK makes a great point. I think you'd rather buy the disruptors than the incumbents.
Shepard Smith here. Thanks for watching CNBC on YouTube.